We are live. Yes, yes. Good morning, beautiful people. It is Tuesday, May 14th. Hope you all have had a wonderful week. Hope you all had a great weekend. As always, I'm not going to waste a lot of y'all's time. I'm going to jump right in it. Check first the trades that we looked at and analyzed on Tuesday for gold, USD, JPY, GBP, USD. And what is this real quick? There we go. And then I will, as promised, if any of y'all are in here from the Discord, as always, I like to go on the last bit of the live, just over my strategy, what I look for on my entry, basically the entry, exit game, strategy, and everything I look for before taking the trade, and what to expect after the trade. All right, so we are going to, let me just do this, and I'm going to share. If you guys did see, Corey done an amazing job on the fundamentals. You can check that out on the Instagram for Surge Trader. We love doing those, but let me check this out. This is forexfactory.com. Again, I always do this every live. No affiliation with Forex Factory. I just love because it's clean, very precise, very easy. You hit the little flag right here. Shows, I'll just show you right here. You can choose between the gray, yellow, orange, or red. Honestly, I don't care personally about the fundamentals, so it's much easier for me to just see what colors. Red, obviously high impact for the trading pairs that you are doing for that current day. And so I just filter them out. Super simple. Think bank, done. So for today, looks like we had Chair Powell Speaks, and you can click on this folder right here, look exactly what it's for, why we care, and what the effect would be for that currency pair. Super simple. And then for tomorrow, it looks like there's a pretty hefty amount for the USD. CPI, obviously you guys know this is going to be pretty crucial for, good morning, big man, for the USD. And then following for Thursday and Friday, a little bit of news. Could be potential for the currency pair, could not. Orange folders are kind of, they're like a 50-50. And that's that. Won't spend a lot of time on the fundamental side. And then let's take a look at, all right. So let me scale this out to the 4-hour time frame. We looked for gold to bring in a retracement around 2,300. Looks like that's exactly what gold did. Gold is pulled back. Again, when you see any pair, anything like that, when you're, I would say like an investment, when you have this huge, massive leg to the upside, there's always going to be what I like to just illustrate. Not that this is exactly what happens, especially with gold, but hits a peak, hits an area of resistance, pulls back, banks pull their profits, people pull their profits, whatever you want to call it. It has a nice little pullback, normally at least half of that area. And this is where a lot of y'all like to use the Fibonacci levels. If you were to draw from this leg to that leg, guaranteed this is probably 31.8 or 61.2, 61.8, whatever those levels are. I don't use indicators. They lag. I don't like using just for illustration. I can put it here and guesstimate on that. I could put it here, guesstimate on that. I mean, there's so many different factors that I could put for, but all it's doing is I'm adjusting it towards my liking. So it doesn't mean it's statistical. It doesn't mean it's anything. Like there's no, I don't know what the word would be, factual meaning. If I put it from this candle to this candle, that's going to tell me that this is exactly where price is going to go. It's just a guesstimation. That's why I don't like it. So let's remove it. Super simple. Same with moving averages. I know a lot of y'all were DMing me, what are these? It's I literally the 50 and the 20, 50 EMA and the 20 moving average. Honestly, on the higher time frames, there's not real, like I'm not going to tell you that I wait for them to cross to do a sell, or I wait for them to cross when I'm buying. There are some times where there's similarities where I'm looking for a strong sell and price has hit resistance and the moving averages are about to cross like right here, literally on that area, and you can see this is where the momentum comes in, but it's not like that all the time. When you have these massive, I can take a look at GM. When you have these massive movements like these up legs, or if it's in a downtrend the same way, you will see some consistency where the moving averages do cross. But other than that, like when you got all this wonkiness, it's just a waste of time. Honestly, you're better off just looking for the current price action based off the levels, and that's it. Don't base your entire trade off the factor of whether or not your moving averages cross. Do not do it. So that's it. Now, again, gold, I said potentially long term could come all the way back down to 2060 if, because you have all this untouched price. I highly don't see that happening, but this is from November of 23 to March of 24. You had where price of gold just fluctuated back and forth. So there is a possibility, because this is a massive, important area of resistance, which now becomes support. You can see where price never realistically came back and touched that area. So no guarantees, but I do feel like gold is going to drop. Now that's a lot. You're talking over 300 points from current price action at 23.50 to 20.60. That's a massive move, but happens all the time in the market. Price could come back down. Do this number right here, and I've already drawn out right here, but price could come back down, just retest this, give it some solid foundation and solitude of this is now a strong area of support, and then gold takes off to newer highs. It's what could happen. Price can do whatever it wants to do. Gold can literally blast through the 24.20 area and then just not care about this price at all. So what I'm seeing right now, just based off current price action and some market structure on the 4 hour, is what I love to see. We have left shoulder, right shoulder, and then we have this massive head right here, giving us an inverted head and shoulders, which tells me gold is about to take off. Could be wrong. I've been wrong many times. It's okay. And what did y'all want me to look at? GBP and ZD? Let's take a look at that. I think I want to say that we were waiting for price to break this. I don't remember. So somebody quote me on that. What was I saying? I should have put a long or short. Yeah, I think we're waiting to see if price is going to break through this and respect that area. I know, man. Listen, I have no control of that. If I did, payouts wouldn't be an issue. I apologize, man. That's all I can say. Remember, I'm just a partner, brother. But so yeah, waiting on this to break on GBP and ZD. You see this massive area right here where price touched here. This is let's just say 2.09. Price touch, bing, 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 boom. Looks like price came up, tried to respect that area, and then price broke through, and potentially we can see a massive downside of GBP and ZD. But if y'all remember what I was saying, I do remember this on the higher time frame. We had a beautiful market structure of inverted head and shoulders. A lot of times on the higher time frames, the larger scale, you'll see where if you have that market structure, price comes back and retests the structure and then takes off. Looks like this. A lot of people would call it the, if you guys have ever seen the teacup pattern, that would be this. I don't even know if I can draw, but yeah. And then teacup pattern, and price blasts off. Also, the inverted head and shoulders. So let me see if I can. Yeah. A lot of potential with GBP and ZD right now. But what I can do, let me go to a smaller time frame. Yeah, so what the only thing I see right now is we have a little bit of consolidation here. Draw you a little box in that area, set your highs and lows, which is basically right here at 2.08 to 2.08750, and then once price breaks through to the high, we buy. If it breaks through the low, we sell. Super simple on that. GBP and ZD is not a very clean pair, so you got to be careful with that either way. All right, let's look at USD JPY. you guys remember. Now I took off the long on this pair, but I don't know if you guys remember. We were discussing this. I wish maybe it's on the other one. I don't know if y'all remember. We were discussing on UJ hitting an all-time high. But what I'd like to do right now, I don't know. Let me see if this is the one I've had for like years. Yeah, but it's all right. What I'm going to do, that way you guys can see my strategy and how I trade. Excuse me. I'm going to just remove all drawings. And this is A to Z. It is 11:19. I'm going to take 5 minutes to go through exactly how I trade on a day-to-day basis, what I look for, and how easy it is. Super simple. And you can implement this into your trading strategy and go from there. I promise you, this is what's given me 8 years of success trading. So you can overcomplicate it as much as you want. This is why I always tell y'all, don't use any type of indicator. Indicators lag. They were built for stock options and stuff like that years ago. They are not working for Forex. I know they might look like it, but support and resistance areas and trend lines are your best friends. That's all you want. So first thing I do, the highest time frame, monthly, and only on current price action. Like you see UJ's here, and then we have price all the way down here in 2011. I don't care about price all the way down here. So when you're drawing your charts, do not clutter up everything from years ago where it's way away from current price action, because all you're doing is stressing your eyes more than what it already takes to just review the charts. So first things first, monthly, switch from my candlesticks to my line chart, and I look for peaks and valleys based off current price action. So because UJ's had this massive leg, what we'll do first thing, peak, and we got a peak there, and then if you want, we can do one more here, but that is pretty far away from current price action because you're talking 148 to 158. Good little bit of movement for a price to go back to that area. But what I'm going to do, that's all right. That's enough for me on the monthly time frame. So I'm going to switch it down to the weekly. Boom! I'll automatically see a little valley here, and then possibly I see a little piece where a price moved differently. I'm going to put a peak there, and then just to even things out and make it more aesthetic, I'm going to put something very center as much as I can here, and the lower time frame, we'll see if that balances out. I'm going to put another one here. This is on the weekly again. That looks like that's right where current price action is, and that's enough. I know right now it doesn't show anything. Daily, see if we got anything else. Now on the daily we can start adjusting things a little bit. Like I can pull this here, I can pull this a little bit here. Maybe what I'll do is I'll even this out. I'm going to pull this up because that's a little bit farther away from where I see current price action. And then down to the 4 hour. Sorry, something's bothering my nose. And it looks like we are pretty spot on. As you can see, all I did was peaks and valleys on the lines. I'm not looking at candlesticks. I'm just looking for peaks and valleys and try to gauge it on the closest as possible. Looks pretty clean so far. I could realistically put one here, like I could do this. But I don't want to overcomplicate it. I don't want to put so many lines that I'm kind of just putting stuff everywhere. But that's enough. That's enough. Down to the 1 hour. All right, now I'm going to switch from the line chart back to candles, and look how clean and precise this is. It literally tells you the story. All you've got to do is follow the trend and then wait for a price to break these massive areas. Okay, wait, time out. I'm gonna go back to line chart. Let me do daily, because you want your mediums. So we find it here. I see price. I'm gonna put a box on this because this is where price met its first area of resistance. Resistance, then became support, and then I would say realistically we might need to come down to a smaller time frame. I used to trade personal accounts when prop firms come out. I tested every single one of them. Excuse me. If you want to know the honest truth about trading personal funds versus prop firms, it's 1,000 times easier for me to trade on a personal account. Pretty common sense, but why? Because I have my rules. I have my trading plan, but I don't have to abide by anybody else telling me what I can't do or can do. I don't have to have trailing drawdown on this, or I don't have to over leverage on that, or I can go below this. You know what I mean? Like prop firms, obviously, Surge, all of them, any of them, they have the greatest idea and the greatest platform for smaller traders who are creating the capital. But what I always try to tell people is, if you're with Surge or any other prop firm and you're getting withdrawals and you're making money, your first goal needs to be to use that money to set up your own personal trading account. Because if you can get that off a prop firm, then imagine what you can do on your personal account with no rules, no stipulations, no guidelines. And that's not to say it's a bad thing, because prop firms realistically make you a better trader. They keep you in check to where you're not just so frantic trading the news, trading craziness, or just going wonky and over leverage and stuff like that. So I mean, if you struggle with discipline and stuff like that, definitely go the prop firm route. But remember, the end goal for the prop firm is to establish your capital to where you can trade on your own. Then you run into the issues of finding, if you're in the United States, a good brokerage, a legit brokerage. So there's so many different factors, especially with everything that's going on right now. My boy Gage, what's up, brother? With everything that's going on right now, not just the prop firm, it's the whole trading. Like, I know a lot of you guys, if y'all are in the Discord, you're upset about everything. You have every right to be. You have every right. I'm not against you on that. But you got to understand, like, there is so much coming down on the prop firm space. You guys seen the Funded Trader just closed, MFF closed. Like all these prop firms are closing, and it's because the U.S. government, they don't want anybody making money. So if they see you making money and they see this business making all this money, paying out all these people off simulated funds and stuff like that, the government's going to step in. They're going to step in any way possible. And the prop firm space is still kind of new, so there's not a lot of rules. There's not a lot of stipulations on what they can and can't do. So now they're just flooded everybody with, you can't do this, you can't do that, you can't do this. And so that's the issue we're rolling through now, is like, where we once did this, now we can't. So we had to find new technology to provide for this. Can't do this. Okay, so then we got need a new payment merchant to do that. Can't accept crypto. So the government, this is why so many people trade on international waters, because there are no rules, there are no regulations. That's a good and bad thing, because they can do shady business over there, but at least you can trade. Like, there's thousands of brokers. You guys can just type in prop firms for Forex, hundreds of overseas brokers. I'm not saying they're better, because you know they can pull the plug at any second. So use your best judgment on that. One, hope I answered that question for you, brother. It's definitely, prop firm space is beautiful. I wish, oh my God, if prop firms would have been around when I first started trading, I had to take loans. I had to borrow out of my 401k to build my capital to where I'm at now. So I definitely would have used prop firm space, but they would have kicked me out if I'd have been pulling the profits I was making. It's just a no-brainer. So real quick, I don't want to take a lot of your time anymore. So let me scale this back down. I think this was here. But you want to find parameters between your highs and lows, and then you want to take your trades based off the momentum of those highs and lows. So what I mean is, if we're in an uptrend and we have our pullback, we don't want to take buys in between this area. We don't want to take buys in between that area. We only want to take buys once price breaks those levels, and this is my strategy. Literally, I wait for price, and this is on a smaller time frame. I'll show you guys what I mean, but I wait for price to break through that area, and this is for sales as well. I'm just going through a buy right now. Price breaks that area, comes back and hooks as a retest, and then takes off. The candlesticks will show you exactly what I mean. So let's go to the 4 hour. If you see it on the higher time frame, it's 100% secure. Lower time frame, you want to just wait for that confirmation. So be careful with that. I'm sorry, y'all. My throat is killing me. Probably because I'm drinking this crap. So 4 hour, I see where price broke through. Come back and retest it, and then I want to see a candle, a bullish candle like this right here. Price broke through, bam. Price broke through, bam. Broke through, bam. Same on sales. It's literally the same exact thing, but you want to follow the trend. So go to the 1 hour, bingo. So prices broke through. We wait for a retest, and now we want to see this candlestick that looks like this right here. Obviously, this would be blue. Now, where would you enter? You enter right here, like right now. That would be your entry because you're on that line of resistance, and then you're 40 pips down. I always use 40 pips. There's no secret science behind it. I never over leverage. So you should be able to take a 40 pip loss, and it affect you none. Meaning, if you're trading a 100K account right now with Surge, you should not be trading with 10 lots, 5 lots, 4 lots, 3 lots. You should be trading with a 0.5 lot, $5 per pip, to where if you catch a 100 or 200 pip trade, times $5 is great money for the day of trading. But also, you take that loss, you're only talking 40 pips. So one winning trade of 200 to 300, which is what I do, I swing from here to here. That one win will wipe out 3 losses. So super simple math. You don't want where one loss wipes out 5 wins. And that's what I see a lot of y'all doing. You want to make it to where if you want your trading to realistically be consistent and successful, you've got to get some discipline on not over leveraging and keeping your stops in check, not touching them, not adjusting them. Listen, if you're in a buy and your stop's here and prices come down, you're like, okay, I'm going to adjust a little bit more. You lost. You lost already. I don't care if price returned and you're like, oh, well, if it would have hit, it would have lost trade. You went against your rules. That's the problem. And you've got to get disciplined to where, listen, I've lost well over $500,000 to almost $750,000 of own capital that I created from my trading. I learned the absolute hard way that no broker, not one single broker, I promise you, fact check this, prove me wrong, not one brokerage is going to allow you to throw 60 lots consistently and you're making 100,000, 10,000, 30,000 a day. Not a single broker alive will do it. I don't care about these Instagram influencers that you guys follow that are doing 500 lots per trade. It's not real. I promise you, brokers will not allow it. They will kick you out. They will blacklist you. You will be gone. So, in order to stay consistent and be successful with that firm, whoever it is, whether it's with Surge or anybody else, low lots, precision on your stop loss. 40 pips is what I use. I've been using that for 6 years now. It's shown me the absolute best consistency. And look for swings based off your areas of support and resistance. So I'll go all the way down the 15-minute time frame and I'll show you guys what I mean. Once price breaks that area, honestly, this is it. It's the rainbow. Price broke, retested, boom, my entry. My entry here, 1.563. I go into 8 pips of drawdown. Oh my Lord. But I have all of this area for the price to breathe in case it goes against me. And if it does, it does. But if it doesn't, I just got 8 pips on the entry drawdown and then a 200 to 300 pip gain because I'm looking to follow the trend. So I just ride the wave. Now, where the real money comes in, 5-minute time frame, and you look to scale based off the inner, where I like to call the heart line of each area of support and resistance. So the heart line is just the very center of each one of those areas. So you can literally do this. Here's the heart line between here and here, and then from here to here, heart line will be in the center. That's it. That's it. What I don't do, I don't take trades in between there. I only take trades once price breaks above that area. So it would be like this. First entry here. first entry there. I scale in here. Once price breaks, possible scale in here. Now, as I'm saying scale in, another rule of thumb, when you are scaling in, you do not, like, okay, I'm just using these. I'm left-handed, so don't judge my drawing. Let's just say this was a 10 lot for simple math. My next scaling position is going to be at least half, if not more, or less than half. So 10 lot here, I'm going to throw a 2 lot here. And then on this, I'm going to throw a 0.5 lot. Again, I'm left-handed, so I am so trying hard to draw that nice. Why do I do that? Because if this entry reverses, I still have my original entry where this will not eat up the profits. So 10 lot, I'm up 50 pips, I'm up 1,500. 2 lot, I'm down $200, so I'm realistically only at 1,300 net positive. Now, price gets to this point. Let's say price comes up, bink, 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 and then here, and then my third entry, excuse me, I'm spitting everywhere. My third entry, 0.5 lot, if this price goes against me, I'm only going to be like the profit from this original entry. I always keep my original entry. I might cash in some of this and like close it down to a 5 lot or a 4 lot, 3 lot, 2 lot, whatever it is to capitalize on that max, the max profitability of my trade. But anyways, what I'm saying is if this is a 1 lot and this is a 0.5 lot, this trade can go all the way down to here before it cuts out your profit. You never want to cut out your profit. Why would you? So here, another 30 pips, original entry, 40 pips of stop loss. I will never let a scaled in entry get to one of my previous entries. I will close this halfway. If I see this going down here, not happening. You're not taking my money. So just remember that, because I see a lot of this with you guys. You'll scale in here, 5 lot. This will be a 10 lot. This will be an 8 lot. And then this goes in a drawdown. Boom, you've done wiped your profits. Then this one goes in a drawdown. Now you're getting serious. And now all 3 of your entries are in drawdown, and you just blew your account, breached your account, whatever you want to call it. So that's why always when you're scaling entries, be less than half of your original entry and only enter trades once they break those areas. I hope that helped y'all. I hope you guys got a little bit of knowledge out of this. I try to keep these only like 15 to 20 minutes because I know a lot of y'all working, y'all on lunch break and stuff like that. So I am going to end this. I love y'all. I appreciate you guys joining. I'll be back Thursday and I'll go over anything. If you guys want, leave in these comments. You can come back and watch this on the Surge YouTube and leave comments. The people will see this and let me know. But let me know what you guys want to see. Let me know what you guys want me to go over. Anything and everything that I can control, I can't control everything. You know, I love to talk about it. Always, man. Thank y'all for joining. Seriously. I'm here just to help y'all. That's the only reason I joined Surge, was to realistically help you guys with your trading. If you're on this through the Surge Discord, please go back and let them know, hey, I was in Brandon's live. I appreciate it. I learned a lot. It sucked. I hate him. I want my payout. Either way, you know, I'm an honest man. You do what you need to do. But I appreciate y'all. I love y'all. And I will see y'all Thursday. Again, Thursday, same time. And yeah, I'm out. Love y'all.